Good morning, everyone, and thank you for joining us today on this What Lies Ahead with the Rising Cost of Living webinar that will provide you all with some timely updates on what the data and research is telling us about how people are coping with the increasing cost of living and what support is available for you and your employees during this time. Please do use the Q&A function to submit your questions at any point during the presentation, and we'll keep an eye on some common themes coming through that we can pose to the presenters at the end of the session. The webinar is being recorded and we'll share the on-demand link with you over the coming days. So let me do some introductions if we can move on a slide. For those of you that don't know me, I'm Jane Clark-Hutchison. I'm the co-head of the client team here at Scottish Widows, alongside my job share partner, Alison Nicholson. And today I'm joined by my colleagues, Robert Cochran, one of our retirement specialists, Laura Waite, our customer and vulnerability lead, and Rachel Proudfoot, our proposition manager. We also have Stuart Hockley, one of our client directors, who will host the Q&A at the end of the call and wrap us up for today. So next slide, let's take a look at the agenda. Robert will kick us off shortly, providing an insight into what our data and research is telling us amidst the rising cost of living challenges. He'll then pass to Laura, who will give us real-life examples of what we are seeing through our member helplines and how our team can support vulnerable customers. Rachel will round off the session by sharing some of the support that Scottish Widows has available to support you and your employees. And then we'll head into the Q&A hosted by Stuart. So on behalf of Ali and I and the whole team here at Scottish Widows, thank you all for entrusting us with the retirement savings for your people. Now, I know you're keen to hear from the experts, so let's get started. Robert, over to you. Robert, you're on mute.
Classic, thank you very much. Thanks, Jane. I'm going to set up the later sessions by focusing on what our research and data is telling us is going on. It can often be hard to see the wood from the trees with all the media noise, so we'll look at three main sources of data. Industry level research, Lloyd's actual data on spending and saving. Around 40% of the UK have an account with Lloyd's. We've got a huge spending and saving database, and it's really illuminating. People aren't always doing what they think they're doing in this space. And then we've asked you to complete a survey, so we'll bring these results into. So that brings me to our very first slide. Do you think we're over the worst of the cost of living challenges? And this is what you've told us, a resounding no. More than 2/3 of you think the worst is still to come. So I was a little bit surprised at just how negative that is, but that's what you're telling us. So let's compare it with the GfK survey. Now, I love this survey. It's been going on, been going back decades, and every month they ask around 2,000 people how they feel about a range of things. But they kick off with a general question about confidence. So the green line that you can see in the graph is their consumer confidence index. So you can see all the way going back to 1989, that low point that you can see just at the far right hand side was just about the time of Liz Truss being in charge of the country. That small period of time there, we sunk to a low point, and the red line is inflation. You can see inflation hit a high point then. But what you can also see is a bit of a rebound, in fact quite a significant rebound in consumer confidence over the last couple of months. Few reasons for that. April CPI inflation figure was 8.7%, so the first time we'd moved back to single digits for quite some time. The weather got a bit nicer, so it was getting a bit warmer. People weren't having to put their heating on quite as much. And if we look a bit more closely at that, so let's look at the finances element of it. If we look at the finances element of it, we can see that consumer confidence has increased by quite a significant bit. So increased by 6 points in all sub-measures. It's 8 points higher than it was at this time last year. So people are feeling a bit more confident. And you can see there, my personal financial situation over the next 12 months, that 8-point jump is quite a significant jump for in 1 month. So people are tending to actually feel a bit more confident than they have been for quite quite some time, in fact, for pretty much the last year almost. A little bit of concern around savings index. It's gone down a little bit, and that's just telling you that people are thinking that they might have to be spending some of their savings and not building savings. And regionally, you can see on the right hand side, Wales is the lowest scoring region and London the highest scoring region. So London's almost moved into positive territory at -1. Now, there's also a strong link between the age profiles and how confident people are feeling. So younger people are feeling a bit more confident. London predominantly a younger kind of population, and -1 there. There's a link there between the kind of regions there. Scotland in second most popular area at -27, and look at that improvement in the space of 1 month from -44 to -27. So one of the reasons that people might be feeling a bit more confident is that as they've faced into the cost of living crisis, they've changed their behaviours. They've not experienced the full level of inflation that we see reported, that headline inflation. So the biggest drivers of inflation over the last year have been EFF, energy, food and fuel. And if you look on both my graphs here, the dotted lines at the top are the headline inflation rates. So looking on the left-hand side, we can see that the headline inflation rate for CPI food inflation over the course of last year was 16.6%. Now, what's the green line that sits below that? Well, the green line that sits below that is when we look at people's actual spend. So this is based on about 14 million people looking at their spending on supermarkets through their cards, whether that's through their bank account or through other cards that they have through Lloyds Group. So it's a big number, 14 million people. You can see that they haven't experienced the full level of food inflation. It's coming at 6.2% increase in supermarket spend over the course of that year. You can see down the bottom some of the high profile inflation increases. On the right hand side, we're looking at fuel inflation. So fuel inflation was capped, and if people didn't do anything differently, they would have experienced an 88.7% hike in fuel costs over the course of last year. But when we look at spend, so people's card spend on, so bank spend and whatever Lloyds accounts that they use to pay that money, they've actually experienced about 35% increase in inflation. So why is that? Well, it's actually because people have behaved in a pretty sensible way. So if we were doing this live, I'd be asking you to put your hands up and tell me how many of you turned down your heating over winter. And if we can just move forward, my connection is lost there. How many people turned down their heating over winter? I'd imagine that a lot of you did that, and that's the part of the reason that we've seen that. So people put their heating on later, they turned it down. Lots of people actually invested in big jumpers. Now, maybe not quite as big as this Udi, but we were working from home, we had our jumpers on, we had our heating turned down. And what we also see through people's spending behaviours is that move from Lurpak to Nordpak, the move from Lurpak to Danpak to discount brands to discount supermarkets. So discount supermarket sales were up 1/5, traditional supermarkets only up 8%. So we saw people changing their spending behaviours, and we can see that coming right through. Another thing that we saw people doing was cancelling their subscriptions. So over an 18-month period, you've been allowed to cancel your subscriptions through a Lloyds account, Bank of Scotland, Halifax. It tells you what your subscriptions are and it allows you to cancel them. That's a huge number, 3.7 million subscriptions cancelled over that time period, with almost half of them being media streaming services. So Now TV, Prime, Netflix. The only one that actually went up was Disney, because they were late to the market and they brought out the Star Wars franchise, so they actually saw an increase, but pretty much everyone else saw a decrease. The second area we saw decreases was around market subscriptions, so things like Grey's, Next Unlimited, and then it was gyms. So we've seen people behave pretty sensibly, and it might surprise you when we look right across our entire population, we see that in December 2021, people had we had 10 million customers that had 3 months of their expenses on deposit. By the time we got to November 2022, that had grown to 11.3 million. People were battening down the hatches. There's quite a number of significant pay increases over that time period, and people were battening down the hatches, preparing for a bad winter, probably of fuel expense increases. So that's what we've seen in terms of people's actual behaviour, and that's on a huge volume of customers. If I move us forward and then say what are some of the concerns that we've seen coming in, particularly and looking forward, what things concern us. So we've seen quite a rise in buy now, pay later solutions. So you can see in the left-hand side the growth of buy now, pay later, and it's particularly over-indexed amongst universal credit recipients. So they're using it to a greater volume than you'd expect from them as a portion of the population. Other groups that use it over-index on it are younger people and what we kind of call constrained parents. So that's people that are buying things but using buy now, pay later to pay for those things up front. And there's not anything particularly wrong with that, except we saw some new entrants come into this space that would allow you to use buy now, pay later to pay for your electricity bill or your gas bill, and that's not something that's particularly positive to be seen in that space at all. With the rising interest rate, things have got a lot tougher on buy now, pay later. You might not see quite as much of that going forward. Big concern for this year is mortgage payment shock. That's all of these people coming off of fixed term mortgage deals. Across Lloyd's Group, we have 1 million people this year coming off of those fixed term deals. So it could be variable deals, or it's mostly though on a fixed term. And they secured those fixed terms when interest rates were much lower. They're expecting what has been described as a mortgage payment shock. We've done quite a lot of analysis across our book, and in February this year, our chief exec was grilled about this on Sky TV, and he put the figure that we had about 200,000 people that we thought it might be a considerable challenge for them to meet these new mortgage payments, and we've been trying to support them. But that's just our book, so right across the country you'll see that happening, people seeing their mortgage costs go up. We've calculated that about just less than £250 per month on average across our book. So it's a significant extra payment shock. And the interesting thing about as we look into cost of living phase 2 is that it's not an even split. So in the past, so last year, pretty much everyone saw their food costs go up and their heating costs go up. So their EFF went up for everyone. As we look into this year, you've got more and more split, because it'll depend when you're coming off of your mortgage payment deal. And remember that only 40% of houses that are owned in this country have a mortgage, so for lots of people they won't be affected whatsoever. It can be challenging when looking at your workforce, how you support them with this kind of mortgage payment shock that's coming in. So oops, if I just move us on again. Then again, asking you, what have you seen over the past year? So have you seen employees increasing pension contributions? Have you seen employees reducing pension contributions? And thanks for everyone that's filled in that survey. I had to take a cut of it, and I can see a lot of you have done it since then. And thanks for that. It's really useful information. But employees increasing contributions 30%, employees reducing pension contributions 15%, don't know 14%, and no change in pension contributions 41%. So on balance there, broadly employees increasing their pension contribution. And I've just asked a question because we saw a bit of this stuff happening last year. So if your employee was to stop their pension contributions, would you as an employer continue contributions? And on the whole, you can see 70% have said no. We did see some schemes introducing that last year as a way of helping to support their workforce, but it doesn't look like it's happened en masse. So across the piece, what member behaviour have we seen? So average contributions have gone up, and they've gone up ahead of inflation rates. So they've gone up over 10% over the last year. So that's quite a bit ahead of wage inflation. We've seen opt-out and lapse rates have remained at level. So opt-outs are between 4 and 5%. And every single month, we also conduct some research where we ask about 2,000 people what they're planning to do about a whole host of things. And one of the things is, are you likely to stop your pension contributions or reduce them in the next 12 months? and it hasn't ever got above 3%. It goes kind of 1%, 2%, 3%, 2%, 1%. If I go to the right-hand side before I come to that last point at the bottom, we've had a bumper tax year end, which means we've seen more people put more money into their pensions as we run up to the tax year end. And part of that was to do with with frozen tax threshold. So I've been out in a number of sites meeting employees, and a number of people become higher rate taxpayers for the first time, and that's encouraged them to pay a bit more into their pension to try and get back down to that lower rate. And I appreciate that's just the places I was, but I was surprised at just the well, I guess that level of not wanting to be a higher rate taxpayer and pay tax at that higher rate. And we're beginning to see some higher earners restarting their workplace schemes. But one of the areas that we have seen a bit of concern is people taking money from their plans. So whilst contributions have remained high, we've seen about just over a 20% increase from last year to this year of people taking money from their plans. So Laura will cover that in a bit more detail. We said we'd tell you about what member helpline calls we're getting in, what queries we're getting in. Well, it's still the main things are about, I want to change some details, so maybe people that aren't using the online services, so I want to update my address, I want to change my name, I'd like some policy information, tell me how to get online access, so the usual kind of stuff. We've got our retirement claims are in at 5.79%, and we can track this stuff, and that's pretty much, it's maybe just slightly ahead of the baseline. Transfers in. I want to opt out. So again, 5.02% of calls on that basis there. Again, it's not that much higher than trend. And looking specifically for, I would like to reduce or stop my pension contributions. It doesn't make the top 10. It comes in at 1.05%. But we'll cover some of that stuff off in the next session where Laura talks about how we support customers with these kind of queries. So the last thing I wanted to do was just share a bit about the data that we see right across the group. So anyone that has a pension policy with Scottish Widows and any other policy within the group, they have a reference number, so we can see if you've got a pension and you've got a bank account, or you've got a pension and a mortgage, all of that stuff is tied into one giant database. And it's not a big spreadsheet, you'll be glad to know. It's something called Power BI, where we can then drill all that down. And I want to specifically look at vulnerable customers just before I hand you over to Laura. So our base here is 12 million customers. And looking across the group, we calculate that there are 3.3 million potentially vulnerable customers. And workplace savings is one part of that, and I'll show you that in just a minute. Vulnerable customers, 27.7%. The number one vulnerability just now is resilience. So that's the financial element to it. And then you can see the other ones underneath that, life events, etc. And then we can drill down into all of that stuff. I can see vulnerability by country, so you can see the different countries, you can see by age, and remember that age itself is a vulnerability. So if you're 70, that'll show up as one of the reasons for vulnerable customers. The other things that you see there, Fresco is different segments used across the bank to try and work out where people are on the journey. So lots of different age groups in there, things like asset-rich greys, etc. And then we've got vulnerability by product area. Now, when we think about workplace savings, 75% of the vulnerabilities that we report in our workplace savings book are discovered outside of workplace savings. So they're not really pensions related, but we tag them onto the system, and tag them onto the system, and then from that we can see how that pans down into workplace savings. So if I look just specifically at financial resilience within the workplace savings book, we just move on to the next slide. You can see this is us breaking down. So let's look at the curve in the bottom right hand corner. It's telling us that we've got almost 1.4 million customers in this space, and 95,800 of them have a potential vulnerability. So that's much financial vulnerability. That's much less than what we were just looking at a minute ago. That's about 7%. And if I look at the reasons why we flag up those vulnerabilities, so total bank balance of less than £100. Customers used 90% of the overdraft in all of the last 3 months. Maybe they've missed payments, they're in receipt of working tax credit, they've missed payments, they've been declared bankrupt, so that kind of stuff. And we know that those kind of customers need a little bit of extra support when they approach us. And it's at that point I'm going to hand us over now to Laura, who's in the team that do support those customers when they contact us. So I hope that's given you a bit of a framing in terms of what we see happening in the data right across the group. And over to you, Laura.
Thanks, Robert. Morning, everyone. As Jane said, I'm the customer vulnerability lead for my area, and I'm going to cover what's coming through on our member helplines and the process that we follow when a customer contacts us for some support. So what are we seeing coming through? So we've seen an increase in claims, specifically in small lump sum pension claims. These are up around 20%, as Robert said, on the last quarter. And customers are telling us that they need the funds to cover mortgage payments and pay bills such as broadband, energy and mobile. And we've also seen members needing to access their pension to provide financial support to family members, as well as members who are still working and also considering making a claim or taking some money out. We recently had a member contact us to inquire about claiming. He told us that both he and his wife were working, but that due to the cost of living increase, he was considering taking some money from his pension to cover his gas and electricity bill. So as Robert said there, we haven't seen a reduction in payments into pensions. Those in some areas have actually gone up, but we are seeing an increase in claims that are linked to the cost of living that people are experiencing. So what happens when a member contacts us to make us aware that they need some additional support? So every colleague follows a process called Texas. They would start by thanking the member for telling us about their situation, then explaining that we can record their support need onto the system, then take explicit consent to record that support need, and then ask some additional questions to understand the member's situation better, and then finally signpost to the support available. And once the support needs are recorded onto the system, they're fed through and updated for any area of Lloyds Banking Group where the member holds an additional policy or product. So colleagues in those areas will know how to provide support when the member contacts them. So as I said, the final part of that journey is signposting. And this is us signposting the member to both internal and external support. So using the system, colleagues select from the topics available. So in this scenario, we'll use financial difficulty. Slide on. Okay. So if the member would like support specifically with an insurance and wealth product, then there's several things that we can do. So we can accept upfront payments, we can settle funds efficiently, we can offer payment holidays, and consider or possibly offer the reduction in pension contributions. Of course, if the member is paying by salary sacrifice, then we would direct them back to yourselves as the employer to actually go through that with them. So that could be one thing to look out for if you've got a member coming to you and asking to reduce their pension contributions. We can also refer members through to Be Money Well, and Rachel will talk in more detail about that shortly. And then if the member would like further support and they have no additional products with Lloyds Banking Group, then we can refer to external organisations to provide support. So as you can see there, we've got Citizens Advice, Turn to Us, and then Mental Health and Money Advice. And the system that colleagues use gives a description of the support and advice that each organisation covers, so that they can then direct the member to the most suitable support for their needs. And then finally, we ask members if they do have any other products with us. And let's say, for example, they had a mortgage with the Halifax. We could give out the details so that the member can then contact them and discuss what other support is available. So that could be anything, say a payment holiday or a term extension. And then because we've recorded those support needs onto the system, in this example, Halifax colleagues will see that when the member calls them, so they will know how to support. Now I'm going to hand over to Rachel and she'll talk in more detail about Be Money Well.
Thank you, Laura, and good morning, everyone. As Jane said, I'm Rachel Proudfoot and I am one of the Workplace Proposition Managers here at Scottish Widows. I'm primarily focused on our financial wellbeing proposition, and so before we open up to Q&A, I'm going to cover off the what next and cover off what support we have available to you and your employees to be able to provide them with financial wellbeing support. Before I kick off, just a reminder that you can submit questions at any point throughout the session, so please do pop those in so that we've got enough questions to get through at the end. You can submit the questions just at the top of your screen, so please do submit any questions that you've got through there as we go through. Just to start off, I just wanted to say thank you for everybody that took the time to complete the pre-webinar survey. It's always really great for us to get that direct feedback and input from yourself, so really do appreciate you taking the time to do that. And it's also really great to see that the majority of you feel that we are doing enough to support your members with financial wellbeing support. And it's also great to see that so many of you are running your own initiatives and doing everything that you can to provide your employees with that financial wellbeing support as well. And so hopefully as I go through the session, I'll be able to cover off some of those additional requests for additional support, and also kind of signpost ideas and ways that you can use our financial wellbeing support to complement what you already offer to your employees. So to get started, hopefully you are all aware of our website Be Money Well, but for those of you who aren't, this is at the heart of our financial wellbeing proposition and aims to educate individuals by enhancing their skills, knowledge and confidence when it comes to managing their finances beyond just pensions. So we do of course have content on there to help people understand their pension and what their retirement options are, but the support goes further than that. So we've got a section on financial essentials, so helping people understand, say, the basics of investing or budgeting and saving support. And we've also got a section on life's money moments, so where we've grouped key financial considerations into different key life moments. So for example, getting married, having a baby, losing a loved one. There's lots of different life moments brought to life there, so covering people of all different age ranges and all different backgrounds as well. And we've also got a section on boosting your online skills. So the aim here is to enhance people's digital skills. So whether that be really introductory, such as using different types of devices, or a bit more complex, such as managing healthcare online, for example, there's lots of support on there to increase people's digital skills, no matter what their starting point is. And for all of our members, we offer access to a digital skills helpline through our charity partnership with We Are Digital. It's primarily aimed at those with little to no digital skills, but members can contact the charity and have that one-on-one digital upskilling session with somebody from the charity, and they can also set them up with different digital devices, or even give them access to a device if their current circumstances mean that they can't get access. And across the whole site, we have content from the likes of Mental Health UK and Macmillan Cancer Support and other useful charities, as we do appreciate that no matter what your circumstances are, juggling your finances and managing different finances can have an impact on your health and well-being. And so that charity support is available on all of the pages across Be Money Well. But a bit more topical for today, as we have recently added a dedicated cost of living page onto Be Money Well, which really hones in on the risen cost of living. So there's support on there to help people manage their debts or increase their savings where they can. There's guidance and tools to help people budget. There's support to help people understand their borrowing and credit options, and also what additional support is available from the government. So for example, universal credit, there's content to help people understand what this is, how to assess if they're eligible for it, and then how to apply for it if they are. And then of course we do have support on there to help people understand the impact on their pension savings as well. So that's now all grouped together into the one place, making it really easy to signpost employees to that specific cost of living support, and making it just that bit more streamlined and simple to be able to provide dedicated cost of living support. So in terms of how members access this content, there are various routes in. So all members can access the content through the Scottish Widows app, and we've seen some really great engagement with the financial wellbeing content through the app since it launched in the second half of last year. Since it launched, we've had over 60,000 clicks into that financial wellbeing content, which is absolutely fantastic. And we have seen a recent spike in engagement with that content over recent months. So I think that indicates it is a really accessible format for people to be able to access the content through. They can do that quickly at any time, just as they're on the go, as it is on the app. But it also flags that financial wellbeing is really front and centre in people's minds right now. So I think it's more important than ever that we are making sure your employees and our members know this support is there, and we're signposting them to it as much as possible. We're also in the process of adding a link to Be Moneywell onto all of our workplace pension pages. So the majority should have this link already, but for the pages that don't, you should see this appear over the coming weeks. And it's worth calling out that due to GDPR, we are really restricted on the types of communications that we can send direct to members. I know that there has been quite a few requests that we do more in this space, but unfortunately we are quite restricted on what we can do. But these are two really good ways that we're able to signpost members directly to Be Moneywell without needing to go to yourselves as the employer. And we are doing as much as we can in this space and kind of always looking for ways to improve. So for example, using more, utilising our social media channels more to pulse out key messages, and also emailing members directly to do the servicing messages, so with the likes of encouraging people to download the app. But we are a bit restricted just with the guidance on what we can do there. But in the meantime, in terms of what communications we have available, we do have a suite of communications which are member facing and ready for you to issue to your employees. I've just pulled out a few examples on the slide there, but you can see there are a few different communications channels for you to choose from to be able to communicate with your employees in a way that best suits them and their working environment. So we really do encourage you to send these out when you can. In the event follow-up, in the follow-up email that you'll all receive on the back of the webinar today, there will be links and references to these communications, and they're available to you to be able to issue them from there. So please do keep an eye out for that, and you can also request them through your dedicated Scottish Widows point of contact, so would encourage you to reach out to them as well. And we do have presentation content available to be able to run dedicated financial wellbeing and Be Moneywell focused presentations. So again, if you reach out to your Scottish Widows contact to be able to set that up, that would be great. And our relationship team also run quarterly member-facing presentations, with financial wellbeing being in plan to be the topic of focus for one of the sessions towards the end of the year. So keep an eye out for more information on that soon. And it would be great if you could encourage your employees to attend when that comes through. It's worth calling out that the next session that the relationship team is going to be running is on the 28th of June, and that will focus on pension essentials. So again, in that follow-up email that you'll get on the back of today, there's a link that you can circulate to your employees so that they can attend that, and there'll also be some more information on what that session entails. So please do keep an eye out for that. As Robert and Laura have covered, events over the past few years have been challenging for everyone, and even if your job has been secure, or you don't have a family to support, these have been challenging financial times for everyone. And as Robert called out, people have adapted, but there might be times where that's a little bit out of people's control. So it's just making sure that employees know that this support is available to them should they need it. So please do make use of this content. We are also aware there is a lot of content on Be Moneywell, and so a key focus for us for the remainder of the year and into next year is to provide members with personalised routes into the content and signposting them to the areas of the site that are most relevant to them and their needs. And one of the ways that we're doing this is through our Financial Foundations tool. So this is currently in a test and learn phase right now, but it will be rolled out to all members towards the end of the year. And what it is it's an online tool where users will answer approximately 20 questions about themselves and their finances, and they will then get an overall financial health check score at the end. That score is then broken down into 4 different categories, and within each of those areas we'll do a deeper dive to give you some tips and guidance based on the answers that you've given, and you'll then be signposted to the relevant sections of Be Moneywell for further support. So, for example, if a user went through the tool and answered the question suggesting they've got a fair amount of debt, That will be picked up within the managing my borrowing section. That will give them further guidance on how they can start tackling that debt, and then they'll be signposted into the debt section of Be Money Well. So to help kind of bring that to life a bit more, I'll just chat you through a short animation. This. So yeah, as you can see, a user will go through the questions within the tool before they are then given their overall financial health check score, alongside the 4 different scores within the different categories. They'll then get further guidance within each of those, and then they'll be signposted to the relevant sections of Be Money Well. So a very short animation there, but hopefully that just brought to life a little bit more how the tool and Be Money Well link together to provide that financial wellbeing support and provide that personalised rooted to the content that is most applicable to the user's needs. So as I say, that's going through a test and learn right now before it's rolled out to everyone later in the year, so please do keep an eye out for that. And just before we open up to Q&A, I'm just going to cover off the what next. So it'd be great if you could have a look around Be Money Well, see what material and support we've got available on there to be able to help with your conversations with your employees. If they haven't already, please do encourage your employees to download the Scottish Widows app. As I said, members can access financial wellbeing content through the app, along with a whole host of other kind of tools and transactional capabilities to help people keep on top of their pension savings on the go. I've mentioned a couple of times that you will get a follow-up email on the back of the event today with further information, a recording of the session. So please do look out for that, and it would be great if you could send out the member-facing communications to your employees, and as I said, you will find them in that follow-up email as well. So that's everything from me. Thank you very much for your time. I'll now hand over to Stuart for Q&A. Thank you.
Thanks, Rachel. And of course, thanks, Laura and Robert too. And thank you, people listening, for your questions. We've had a number of those. And I think first, just Rachel, thinking about what you've just spoken about in terms of Be Money Well support, my favourite part is that it covers a really wide breadth of information outside of retirement savings. And that extension of the Financial Foundations tool, a brilliant addition. What, in terms of what we're developing there, what's different to what's already available in the market?
I think it's a really good question, and I think what a key differentiator for us is the fact that we are part of Lloyds Banking Group. So in developing that tool, we have been able to work with the behavioural science team within Lloyds Banking Group to build it, and being part of the group has given us access to massive amounts of data. So we've been able to tap into the data of over 1 million customers across the group, across insurance and retail and so on. And so the calculations and analysis that's done in the background when a user goes to the tool is really, really robust and set against that data as a benchmark. So users can be confident that it's not just a random number pulled out of thin air. There is actually a logic to it. It's based on what we're seeing and patterns that we're seeing across other areas of the group and customers' activity. So I think that's a massive differentiator for us and in comparison to what other tools are available.
Brilliant. Thank you, Rachel, because obviously a joined up journey where you're in our app, you can see our wellbeing support, and then you've got tools and calculators as well. It's really, really important. Laura, we've had a question in from somebody talking about pension lump sums. It's simply, I understand that when members take their pension as a lump sum, they're taxed at an emergency tax rate. So what support guidance do you provide around reclaiming any overpaid tax? And do you have any idea how much tax is not claimed back?
Sure, okay. So it's just worth noting small lump sum claims. So that's where we've seen the biggest increase. They are taxed at the standard rate, so 20%. So it would be the uncrystallised funds pension lump sum that is initially taxed at the emergency rate. So we always give out contact details for HMRC. The customer does need to contact them directly themselves. It's a very quick process. I've heard that there's often not a long wait on the phone line, which is great. And the member would literally call them, give out the details that's on the claim letter that we've provided, and they will then organise a refund in any overpayments. So that's applicable for a member who's paid emergency tax and shouldn't have, as well as members who aren't earning up to the threshold, so should have paid no tax. And those refunds normally come through in a very timely manner. So it's literally 3 to 4 weeks for the refunds. In terms of the amounts unclaimed, because we're not able to get involved in kind of claiming tax back for members, unfortunately, I'm not going to be able to cover off how many or how much is still outstanding or unclaimed from HMRC. Unfortunately, they won't give us that detail.
Well, I've certainly seen a piece in the press that highlighted the sort of much inflated emergency tax codes that have been used, and it was muted around 1 billion in overpaid tax to date, and certainly in the first 3 months of this year, they reported 16,000 forms to reclaim overpaid tax. So, and I think the number around that was nearly 50 billion. So it's quite a problem, not helped by the rules that are imposed in us having to apply these emergency rates in the first place. But brilliant that we're providing some guidance there to help people reclaim it. But obviously that's something else for people to do. Laura, while we've got you speaking, you spoke really passionately about how your team make a real difference to people in extremely challenging circumstances. So can you tell us about a time where you're most proud of the support that we've been able to provide?
Yeah, sure. So probably the one that's really stayed in my mind is we had a member's wife contact us recently. Her husband had caught COVID and was in hospital, very ill. He couldn't speak to us. So we had to really kind of think about how to support them. She needed to take some money out of his pension. They were struggling financially, and they also had some medical bills that they had to pay for, as well as kind of day-to-day spending and bills that were coming in. So we really had to build a case that we could then take forwards and present to risk and get an acceptance from them and an agreement that we could go ahead and pay that out. Obviously, we didn't have a power of attorney in place. And the member would have been unable to have agreed to or signed that. So it was a really tough one. They were really struggling. And I think had we have just, not thought about it and really thought about how it was impacting the member, it would have been very easy to just say, well, no, he's not going to be able to sign anything. He can't speak to us. You're not having any money. But yeah, really being able to understand why they needed it, what had happened, and then build that case to present to risk resulted in us then getting a risk acceptance and being able to pay out some of the money from the members' pension to support them.
So hard without an enduring power of attorney to have the legal power, but brilliant that we can be flexible. So Laura, thank you. And look, I think I've got time for one last question. So Robert, turning to you, we shared as part of the session today, earlier, and also in the invites, the questionnaire that you mentioned, and you covered some of the responses earlier, but I'm sure you've had a lot of responses during the course of today while people were waiting for us to start. So is there anything else you want to highlight?
I think one of the things that surprised me, and in a really positive way, was the question about what support do you offer to your employees, and dealing with the rising cost of living, and there's some really great stuff coming through that. So if I categorise it, you've got payroll, loans, grants and payments that have been paid to support people. That was like that was the number two thing. The number one thing was access to EAP, employee assistance programs. So that was the number one thing. The number two thing was around payroll, payroll payments, as I say, grants and one-off payments, etc. And then I guess the third one was about the kind of stuff that Rachel was talking about. So access to wellbeing support. So yeah, I mean, I have to say that the whole big bit around payroll support's been a surprise. It's not something that we see obviously at Scottish Widows, but it's fantastic to see.
Brilliant. Thank you, Robert. And I imagine in the follow-up for the session we might be able to say more. I certainly know from working with some of our employers that it's always a challenge whether you offer something to your employees that maybe you feel is not the right thing for them to do. But on one level, if somebody's going to look for a payday loan, I'd rather as an employer to have vetted the provider and make sure it's a reasonable provider rather than leaving somebody potentially in the wild west of short-term lending. So brilliant. I mean, look, thank you to all of our speakers. A great session, a lot to consider at the minute, obviously, and I hope the last sort of 45 minutes or so has provided some help and support. So just to summarise what we've heard today, Robert highlighted some great insights from our data and research around the cost of living challenges that remain, how this has affected people, what they're asking us about and what they're subsequently doing. Laura then, of course, shared how we're supporting vulnerable customers, in particular key moments that matter around that time where people are wanting to access their money. And finally, Rachel so eloquently put the spotlight on our financial well-being support to help people be money well. You can use this, particularly the Be Money Well material, you can use this and be proactive with your people. Don't just hide it within some form of HR communications or HR website. Please do be proactive with that material, and we'll be sharing as part of the follow-up to today's session some of our email templates that you can use to serve that out to your people. But obviously do please host the links as well within your HR systems. So you will get a number of resources, including links to that material after today, but it will also include our next webinar, which is part of a quarterly program where we run continual different sessions. The next session is on pension essentials, but a future session will be looking specifically at financial well-being, and one in the autumn where we're looking just to jump on the pension engagement season and give you a bit of a special in that regard. The pension essential sessions on the 28th, it's going to cover the basics about pensions, so it'll include things like checking your details, updating your beneficiaries should the worst happen, so we know where to pay your benefits, what's available within our app, what other support is online, how paying more can make a big difference, and it is never too late in that regard. Pension transfers is always a popular question, so of course we'll cover that, and definitely the investment climate has been challenging, so we comment on investments too. So look out for that session. It will also be within the next within the follow-up that we send out today. So look, just by closing, thank you all for listening. Thank you for your questions. If we can just move on to the QR code, please. The clicker doesn't appear to be working, but there's a QR code that is now on your screen. Please do scan that with your mobile phone. It will take you to a short form to give us your feedback. We always appreciate the comments that you make, and in particular, you then shape what you want to see in future sessions. So please do take just a couple of moments to fill out that survey. Obviously, it helps us to plan that future webinar content. This is in a series of expert sessions, and we want to make sure that they're relevant to you, our employer clients. As we mentioned at the start, the session is being recorded. We'll also share this with you as part of the follow-up email, and it will go on our employer hub in due course as well. So that's all for today. Thank you once again. We hope to see you in future webinars, and please do enjoy the rest of your day. Bye for now.